So hello everyone and welcome. This is going to be the next big strategy video we're going to be uploading for the channel. So to any of you who are new and some who are probably existing, as you'll know, we upload strategy videos all the time. These strategy videos are to teach people just like yourself about how they can trade the market more efficiently in order to produce better results and obviously produce more money and success. Now, in terms of this video, it's going to be an educational video. I'm going to be showing you a testing process we make use of inside the MS Equities group. Now, I'm sure you must have some upfront questions about myself. Just to introduce myself to you, my name is Morgan and I'm the Director of MS Equities Trading. I not only train students in over 28 countries around the world, but I run my own capital management group and I'm a professional trader. To anyone who wants to find out a bit more about me, you can go over to these articles over here. These are articles that I have been featured in, talking about my career, my journey in the industry and how I became a professional trader. You can go have a look at those so we can jump straight into the strategy video, so I don't need to talk about myself too much. But getting into all of this, we're going to be talking about a strategy tester. Now, a strategy tester is a very important thing that a lot of professional traders use. And a lot of this information that they make use of doesn't always get filtered down into the bottom of the industry. Now, most importantly, we need to realize as retail traders, we are receiving the information last. We are the people that are receiving retail information, data that is slow, and obviously we're not getting the scoop on any kind of details as they come out, because everything we do as retail traders is reactionary. But the thing is that what do the professional traders do that we can do? And one of the things that they make use of, which is a very simple thing, is creating strategic testing. And now strategic testing, depending on where you've been in the industry, you might not know this term because some people use different terms. But strategic testing is where you take a set of testing strategies, a set of processes that you know work, and you run those tests consistently. Maybe you run them once a week, once a month, maybe you're even running them every single day. And what these do is these then produce the results for you, showing where the market is on certain asset classes and if there is opportunities that suit your criteria. Now, what scares me about what's behind me is, although it is a very simple way of testing the markets every single month that can produce a huge amount of success for yourself, not a huge amount of students learn these things. And also not a lot of traders that I've met, even experienced traders, have this kind of consistent process and schedule in order to look for trade ideas. A lot of people who go out looking for trade ideas will open up a chart, look for the best option they have available and trade it. They're not trying to look at market correlations. They're not trying to assess the risk of the market. They're not trying to look at opportunities which professional traders look at, and that's usually why they're not making money. Now, this is going to be something we're sharing with you, but we're going to limit what we share, specifically because our academy students are the people who pay for this information. So we're going to be giving you the basic details, the basic breakdown of how we show this to our students. But to anyone who wants to get access to the academy, links will be down below to our website. It only costs $475 for 12 months of training, and you can pay that off over 12 months. It's a very cost-effective program, but let's get into this. So just to start out with, if you can't see this perfectly, I'm probably going to put up a picture over here, but if it looks nice on the editing, I'm just going to leave it like this. So the goal is to have a look at the monthly tester. So what we've basically done is we've defined a time frame. So a time frame is very important to define. Are you testing the weekly? Are you testing the daily? Are you testing the monthly? That will actually dictate the frequency of your testing. So if you're on a weekly chart, if you're testing weekly processes, you want to be testing at least every single week or every second week. If you're on monthly testing processes, you want to test at least every single month. But if you're on daily, sometimes you might only want to test every 3 or 4 days, because it's not like one single candle is going to completely change the outcome of that trade opportunity. Now, if that trade is very close to being triggered by your testing process, then maybe you should be checking it every day, but that's a bit more complex. What we're going to basically do is we're going to pick a simple set of processes and strategies. So we're going to go through a few of the different things you need to consider inside your strategy tester. So in the monthly tester, we have to ask ourselves the question, what do we test? What are we going to test? So for myself as a derivatives trader, I'm going to focus mainly on FX because that's what I trade the most. Then I'm going to be focusing on indices, or people call them indexes, like the tech index, the Dow Jones Industrial Average, the DAX, the FTSE, the NASDAQ, whatever kind of index you've ever heard of. Those are what indices are. We're going to be looking at commodities as well, mainly the top commodities like oil. We're going to look at gold. We'll look at silver as well. And then maybe we'll look at something like coffee or some kind of commodity like that, like sugar, because those are also opportunities we can trade, but that's slightly more complex. So for this video, we're going to stick mainly to the FX, indices, and commodities. On top of that, some things that I do look at is stocks. I also focus on the stock sectors. So I'll trade like the banking sector or the tech sector if there's a big opportunity, and I'll trade right across the board. I'll also have a look at bonds and bond yields, even though I don't trade them. So I want to basically see where the risk is. I'll also have a look at the VIX, which is basically a volatility index. If any of you don't know the VIX, you need to understand it. And then I'm also going to look at interest rates. But this at the bottom is slightly more complex. We're going to stick at the top. Now, the test that I'm going to be running is focusing on this. The reason why I wanted to pick these specific tests for you, these specific indicators, because each and every one of you, if you have a MetaTrader platform, you will be able to do this at home without any issue. So I don't want to give you very difficult strategies to use like we give to our students. So with our students, we develop extensive strategies that they have to use Excel spreadsheets for, and they have to run actual testing processes. But what we're going to be doing is we're going to be looking at simple tests. We're going to look at the stochastic indicator, the money flow index, the Bollinger Bands, candlesticks, pivot signals, and the MACD. Now, to anyone who does not know any of this, what I'll do is I'll put some videos up in that little I box for you, and I'll put a video up about these, how to trade the stochastic, how to trade with the MFI, and then also talking about candlesticks. You can also download our candlestick PDF guide. Just email us, study@msequitiestrading.com, and we'll send you the candlestick guide we built for our students to you completely free of charge. So we're going to look at those different indicators. The goal is to basically have a look at when the market, or whichever asset class, so let's say for example we pick pound or euro US dollar. So we're going to take euro US dollar and we're going to run these tests on it. We're going to basically look at the stochastic levels. Is it overbought? Is it oversold? We're going to look at the MFI on the same thing. We'll look at the Bollinger Bands, see where the market is within the Bollinger Bands. We're going to look at candlestick analysis, check if there's any candlestick opportunities, check if there's any pivot signals as well. So that's slightly more complex. That's something we really work with our students on, is how they can identify pivots. And then the MACD, which just shows us momentum, whether it's growing or shrinking. Now, don't forget, it's on the monthly. So we're going to be focusing on the monthly time frame when we look at these. But on top of it, we can do multiple time frame analysis, which is also another complex strategy. Multiple time frame analysis allows us to go down to the weekly or the daily and look at the smaller time frames and see if there's correlations between either time frame. We'll do that on this chart as well, but sometimes that is slightly more complex. The testing can be slowed down quite a lot. Now, the big one is about the results. So what are we actually looking for? We're looking for trade ideas. We're looking for what the market can show us, saying, yes, this suits your XYZ criteria, and I think you should trade it. Now, that's obviously you speaking to yourself. The most important part is if you're not documenting this information and actually putting it in a spreadsheet and showing the results, you're not really going to have a lot of success translating into your trades and your portfolio. You're going to be doing a lot of information processing, but that's not going to mean diddly squat for you. If you're not trading on this information, the value is worth zero. So the important part is how you're going to have a look at the results. Firstly, you want to look at what's overbought and oversold. So what people don't realize is the market is a bi-directional market. The price is only going to go in two directions. So bi-directional, meaning it's either going to go up or it's either going to go down. That's all your job is. Is the market too far down or too far up? That is what the simple idea of oversold versus overbought actually is. Is it far beyond the average price movement level that it has had before? in the higher limit or the lower limit. And that's what overbought versus oversold shows us. And the stochastic indicator video we put in the little box up there will show you exactly why that's important to have. So the main part, we'll look for overbought versus oversold markets. And we're also going to look for if there's correlations there, but we'll talk about that as well. So the big one is multiple signals coming from one currency or from one asset class. Now, if you've ever had a look, you can trade the euro against multiple different currencies, the dollar against multiple different currencies. Let's say, for example, you're trading the New Zealand dollar and you see on multiple different currency pairs, the New Zealand dollar is oversold against those currencies. Now that's what we call a batch opportunity. That's where the trade is basically showing, the opportunity is showing on the same currency, but against different crosses. So maybe it's trading against the Aussie dollar, New Zealand dollar, Japanese yen, euro, New Zealand dollar, and so on. So as you see multiple currencies be triggered by your testing process, that means you now have found a batch currency idea. And these are great because if you find a trade where, let's say, for example, the currency is oversold on 3 different crosses, then you'd, instead of trading one currency, be able to trade 3. And that's just a slightly more complex strategy that professional traders use, but it at least allows us to spread our risk across the board and reduce any possible exposure to one single currency by instead spreading it across multiple. Now that's going to be the next point that we look at, but then the next one is going to be looking at pivot signals and when it's the right opportunity. So when I spoke to you here about the pivot signal strategies, we're not going to be showing that to you because those are for our students, but it's important to understand that the market, whether overbought or oversold, will never stay there for that period of time. Now, some asset classes can, for example, stocks like Amazon. They always thought Amazon was an overbought stock for years and years and years, and the stocks continue to rise. But when you have a look at something like currencies, if a currency moves too far beyond its fair value area, becomes too cheap or too expensive, the central bank will step in and try and rebalance that. Now, why is that very important for this specific video? If you're looking at the monthly charts, these trade ideas coming out are going to take you months to trade. So if, for example, you find a trade idea and you think over the next 8 months, this trade is going to pivot in this direction and make you money, well, you have to wait 8 months. So when you have a look at currencies, you know that over an 8-month period, if the market is oversold and it's moving into an extended area, sooner or later the central banks are going to come out and say, listen, maybe we need to rebalance interest rates, look at our balance sheet, and they'll try and actually manipulate the FX currency to try and move in the direction they want it to. Now, this is the function that they perform, and they're allowed to do this. But being able to ride on the back of their hard work as a trader is a simple strategy to use. So basically, when you're looking at your pivot signals, you want to try and find where the market is going to turn. Because when the market turns, you can add your position in the opposite direction and hopefully make money. Now, this is a simple strategy that we make use of, but it filters down from everything else we do. So this might sound simple, but it's actually from a lot of information processing. The last one is looking at risk assessment. So this is something I really make use of with stocks, bonds, and the VIX, is I want to try and have a look at the volatility of the market. I want to try and have a look at what's happening with interest rates, with yield rates, and I want to try and see how much debt is being bought and sold throughout the month. Now, when you're having a look at the risk assessment, you're first going to have a look at the indices health. Where do the indices lie? Are we very high on the market? Are we down? Are we off previous highs? Has there been a big sell-off? Where is the market standing? I usually look at the Dow Jones, then I'll look at the DAX, the FTSE, I'll look at the Japanese indexes in Asia, and that's just about it, because those are really the main markets I trade. If the market is severely down, I know there might be some volatility and sensitivity. But if the market is high up, maybe it's moving back towards its previous highs or it's beyond the previous highs, I know that there's going to be more confidence and less volatility. So that's just a risk assessment I'll use. The bond yields are also important, having a look at interest rates. If you don't know what the bond yield inversion is, if you don't know what the yield curve inversion is, then you should be taking some more time to research bonds. I'm not going to talk about it. And then the VIX. you want to have a look at the volatility index. You want to see what volatility looks like. And again, I'm not going to try and explain this in this video. It's just going to take too long. But then down below here, what have we got here? So we've got just a few important points about why is this stuff important for you to make use of. Well, firstly, we're trading CFDs here. Now, CFDs are really good to be able to trade because you've got high liquidity, you've got great market access, good costing, spreads, etc. And basically CFDs or derivatives allow you to get in and out of the market with absolute ease because you're trading contracts. You're not trading the underlying asset class. Whereas if you're trading, for example, stocks, and you're trading low float stocks with underlying asset classes, that is a big risk assessment you'll have to use over here, as well as the fact that the low liquidity of stocks can drive up volatility and can make this very difficult to understand. So with things like FX pairs and indices trading on CFDs, great to make use of. Next point, accessible by the public. So being able to download a trading platform, open a brokerage account, and then basically start trading is all you need to do to get into the market. So it's a lot easier than if you, for example, have to go to a bank, you're signing 25, 30 different forms, and you're basically, it feels as though you're signing your money away and getting it locked into some kind of vault bank account that is very difficult to withdraw from. Usually with the withdrawals are slightly expensive, etc., those kinds of things. Being able to do this, the public can get into trading the market a lot easier. Now, these blue areas, I'm going to talk about these blue areas as well. These are slightly more complex reasons why I trade these markets and why all of this is important. But the next one is it's a very low cost solution, like I did say to you. When we're trading high levels of liquidity, we're trading massive capital accounts, it's very easy for us to get in and out of the market and net a really, really good profit with a huge amount of money without any worry whatsoever. If I've got $1 million account and I can produce 25, 30% return on my account this year, for example, last year I did 27.1% return on MSE Prime. You can go have a look at the links over here for it. But MSE Prime is copying to a very large portfolio. So if I were to take that money and go invest it in property, it probably would take me a couple months to secure the property, plus a few years worth of waiting for that property to mature at an interest rate, maybe 12%, maybe if I'm lucky, maybe I'm probably gonna net 9. So it's not really as easy to make money on something like property, although there's nothing wrong with property. So it just makes it a very low cost solution because you can generate, let's say 10, 20% return and you're netting probably 80 to 90% of that and paying about 2% in costs. Now the easy access to leverage, I did say risk warning here. As you become more experienced as a trader, you're going to have access to a lot more leverage and liquidity. I am able to call up my brokers given my track record and say to them, I want more leverage or I need more capital allocated to us for any specific reason, strategic or just traditional reasons that I do as a trader. So every single year you're going to renegotiate your brokers, whatnot, that's more advanced. But the reason why I say this is if you went to a bank and you asked them for a $100,000 loan and you said to them, this is what I'm wanting to do with my investment, but I don't have much experience doing it. Now, they probably are going to say no to you because you need a track record. When it comes to a broker, they will initially provide you leverage, and this can be dangerous because you can use it the wrong way. But if you use it the right way, let's say, for example, you double the leverage on your account, so it's a 1-to-2 ratio. Let's say if you're trading $100,000, you make $20,000 that year, so it's 20% return. But because you've leveraged it 2 times, you're actually going to net double the amount. So that is basically allowing you to take less money that you have, and they basically are going to give you an additional $100,000 of leverage, and they'll allow you to trade a much higher exposure in the market. So you can generate a much higher level of return with a complete ease of access. You don't even usually need to apply for leverage at the broker. You can just email them and ask. Now, the next point is going to be that these are very simple testing strategies. You can use these whenever you want, and these are all going to be accessible on a MetaTrader platform. The next one, it can be used on different time frames. So like I said to you, whether it's the weekly, whether it's the monthly, you can make use of this information, and these basic indicators are going to work on just about everything. what you're going to just do is increase the frequency of your testing on those smaller time frames. And then also, processes can be automated with algorithms. So to some of you who do know or might not know, the MS Text Group is one of my companies where we focus on building algorithms. So from the Obsidian project that we've built through to other projects, we basically focus on automating everything we do. And then on top of it, being able to test this information and see if the strategy is viable over a long period of time. We compile all those results and then we actually see if it's a viable idea to invest a huge amount of money in to build an actual algorithm. Once these algorithms are built, they scan the market for us and give us the ideas instead of us having to do it manually. So that is definitely the higher end of the trading industry as professionals working from home or working in the finance industry or big investment groups. Now, the last points are going to be talking about the efficient testing process with steps that can be repeated. So these testing processes are very rudimentary, it's simple, and once you get into a rhythm of it, much like tying your shoelaces, it will become a subconscious task. Now, successful people are people who have produced habits that they consistently practice. This is a healthy habit to help you find trade ideas, and this is definitely something you should be doing as a trader, beginner, intermediate, or advanced. Now, the next point is talking about filing away your results to refer back to them if needed. Now, being able to do this, let's say every single month, every single week, means you can go back into your chronicles of documents and you can actually have a look at, let's say, for example, 3 weeks ago you took a trade and now it's a big losing position. You can go back and have a look at what triggered you to take that trade in those strategy testers. That'll allow you to learn more about your system, about your testing process, and see if you can improve it and prevent it from happening again. The reason why a lot of people struggle to learn from their mistakes is because they do not document this information. Documenting it makes it a whole lot easier. Now, the next one is going to be talking about something I touched on, the spotting cross-asset, cross-market correlations. So when you're testing, let's say, for example, 30, 40 different strategies, you see one currency pair has given you a result, and miles down the list, another currency pair gives you the result. And you think those are great ideas. But if you don't write that down on a piece of paper, you might not spot that they could be the same currencies. They could be a euro US dollar and a euro pound position. So that means that possibly there is a trade idea on the euro itself, and that triggers you, that prompts you to go and have a look at the euro specifically. Now, like I said to you, these batch trade ideas can allow you to mitigate your risk and maximize your return at the same time. So those are important to look into. When you get your results back, make sure to check if there's not multiple currencies that are triggering at the same time. And then the big one, track testing results to map trends. Now, this is a much more advanced thing that we make use of, but it allows us to see the development of certain trade and asset classes. Now, as we can see, certain asset classes perform really well to certain strategies, some do not, because every single currency is different, governed by different central banks, different interest rate policies, and different economies. But what we're able to do is at least spot what currencies, what asset classes perform really well when we use these certain asset class testing processes. So once we establish what the asset class is, we then establish what works on the asset class, and at the same time, we sometimes will go and look back in that specific asset class's testing to see how many times before we traded that asset class or even tested it, and if it was successful or not. So for example, I know going back even to 2017 in June that one of the trades that I lost was on the New Zealand dollar Japanese yen, and I remember exactly what went wrong. So I know all the way back to 2016 the trades that I've lost all the way up till now, and I can explain them to you in extreme detail. Now, the reason why I'm saying that is because this has been documented and I've been able to refer back to that information, study it, and learn about what I did wrong. In doing so, I'm able to develop new habits and new ways of learning and doing my job that helps me never make those mistakes again. This is something you should be using in your week and your month of trading. To anyone who wants to find out about how I do this, if you want me to jump onto the chart, make sure to leave a comment down below and say, show us your strategy tester. If If you want to have a look at that, I'll make sure to do a video coming up very soon, and I'll show you my entire strategy tester for one of our testing processes. I'll show you about how it gets tested, first how the asset gets selected, how we test it, and then how we find our results to produce trade ideas that make us a lot of money. To anyone who wants to find out more about how we train students in over 28 countries around the world, please make sure to go to www.msequitiestrading.com. You can find out about how we train students in over 28 countries around the world, how we run a specialized online training academy that's not only accessible by the internet, but also accessible by mobile apps for Android and iOS. On top of that, we do weekly trading sessions, traders talks, where every single Sunday we all log on to a platform and I provide additional free education. So if any of you want to find out about the academy before you join, come to our Sunday traders talk. All you got to do is email study@msequitiestrading.com. Every single talk you get a full study pack of notes, an entire study pack of notes, and over an hour and a half of speaking with myself and my team about trading the markets, trade ideas, information you can use, and how you can take your week going forward as a profitable trader. Once again, everyone, thank you so much for tuning into this video, and I look forward to seeing you in the next one. Cheers for now.